Good morning, everybody. Happy Friday. It's September 6th, 5:28 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. Matt Bennett is here. Guys, let's start off with the soybean winning streak.
Soybean futures closed higher for a fifth consecutive day on Thursday. The November 24 contract gained only 2 cents per bushel, but was able to keep its recent winning streak alive. While yield estimates from both USDA and private groups remain high, some traders believe that heat and dry weather during the month of August will result in losses. China has exhibited greater interest for U.S. soybeans as of late, which is mostly normal from a seasonal standpoint. Corn futures finished yesterday's session lower for the first time in 5 sessions. Wheat futures also snapped their recent winning streak.
Matthew, I'd like to talk about the heat in August and the yield implications. I pulled two maps. These are the Iowa State maps. Some of you guys are probably familiar with this. So this is the month of August average high temperature, and the number that you're seeing on the screen is a ranking out of the last 132 years. One would be the hottest out of the last 132 years. Aside from some places in Ohio, maybe I don't see anything crazy here. But then I pulled the second map, and this is the last 10 days of August. And you can see here that almost everywhere was in like the top 30 or top 40 hottest of the last 132 years. And you go to Indiana and Ohio, some places were in the top 10. And that's where you saw crop ratings decline substantially. That's where we've seen some drought build. Even Illinois and Iowa, not great, much hotter than normal during the last 10 days of August. When it comes to yield projections, USDA is very high, and all of the private groups have pretty much followed them and are very close. Are they wrong?
That's a big question. I mean, here's the thing for me, Joe. There's no doubt you need rain in August. All right, beans are August crop. But I mean, bottom line is, if you had some rain, the weather that played out is probably ideal for you. Yeah, a little bit of heat towards the close. I understand. If you didn't get any rain at all, it wasn't ideal for you. Okay, so is USDA right? Is what your question is, and so. I want to compare, like, for instance, USDA at 53.2 versus Pro Farmer at 54.9. I mean, essentially what Pro Farmer found was massive pod counts, and pod counts are great, but clearly, Pro Farmer's methodology is fantastic. They were basically saying that, hey, if you catch a rain to finish this crop, then essentially you're going to have a huge crop. There's so many pods out there, but USDA is probably a little closer, in my opinion, than Pro Farmer if I had to pick one of the two, just simply due to the fact that you finished so dry. So bottom line for me is I don't expect a big change as far as September yield goes for beans, to be honest with you. I don't really expect it to go lower. I mean, you do have a massive plant out there. Seed size might be a little lower or smaller, than what people would maybe prefer. But at the same time, more pods and smaller beans still means a pretty darn big bean crop. So I still think this is a huge bean crop.
So we have a USDA report next week. I believe it's Thursday. And you'll probably see some sort of adjustment because the methodology changes a little bit in September. I think they start to use some of the objective yield data, whereas they don't in August. So it'll be interesting. I mean, everybody's on board with this record soybean yield, and there are some reasons to believe, maybe not so, but we'll see. Let's jump to the drought monitor.
So, the majority of the Corn Belt experienced above normal temperatures with minimal rainfall last week. Because of this, drought conditions worsened in Ohio, Indiana, Illinois, Iowa, Wisconsin, Kentucky, and Missouri. Conditions did improve up in Wisconsin and Michigan. Portions of the High Plains received rainfall last week, and as a result, drought conditions improved in central Kansas. A lack of precipitation caused conditions to worsen in western South Dakota and Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn country 13%, soybeans 19%, winter wheat 52%, spring wheat 22%, and cattle country 24%.
We've got a lot more color on the drought monitor now than we did, say, a month ago. Matt, we're going to get to the river in a second, but as far as crop prospects, you can talk about soybeans, you can talk about corn, you can talk about winter wheat. What does this building drought mean in some of these areas? I'm not going to read too much into the yellow stuff in Illinois and Indiana, but you look at Ohio, you look at Kansas and Oklahoma. There's some drought out there.
Yeah, I guess for all the excitement that we had after, for instance, Hurricane Beryl came up through and dumped rain on most of the Eastern Corn Belt, I guess at that point, you were looking at, essentially that August WASDE showing with with the thermal imaging really lush conditions, right?
Yeah.
And so essentially, I guess what I'm getting at is, there was a lot of excitement there, and then you finished poorly, and so you're probably taking the top end off yields. I guess my personal thought is that maybe corn could scale back a shade as well. I've thought all along that could be a high watermark, although I've seen some folks forecasting that this crop could actually grow just a bit. So I think it's tough. I mean, it's nitpicky to try to figure out how big a big crop is, but we certainly didn't finish as good as what we could have. So whatever it was going to be, I don't think that we're quite there.
Well, big crops generally get bigger when it comes to USDA estimates, and we'll see if that's the case this year. You got to remember that when USDA started off with its very early preseason yield expectations, I think they actually dialed back the trend line number just a little bit this year, and now maybe it looks like they were wrong about that. I don't know. We'll get an update on yield stuff next week. All right, now let's go to the river.
So the Mississippi River is shrinking and barge rates are surging. Drought in the central and Midwest regions of the U.S. is causing the river's water levels to decline. Barge rates along some areas of the river have increased nearly 20%. Restrictions have already been implemented on the number of barges that can traverse the river and the volume that they can carry. The low water levels are anticipated to inhibit corn and soybean shipments, making U.S. grain exports less competitive on the global market. With very little rain in the forecast, water levels are expected to decline further.
So right now at Memphis, they're 6 or 7 feet below normal, and it's projected to get worse. There is basically no rain in the forecast the next 7 days. The extended GFS out through the 22nd is indicating that rains may return to your northern river valley areas around the 15th or 16th of the month, which would be very much welcome. Immediately post-harvest, Matt, that's primetime soybean shipping season. China has exhibited some additional interest in U.S. soybeans out of the Gulf and the PNW. What are you seeing here in terms of impact? You seeing basis impact yet?
Not yet, not to a big degree, but I think, bottom line is you're going to. I mean, you're right. It's prime time to ship beans. We've been competitive on the world market, both corn and beans, as evidenced by China buying, right? I mean, China doesn't want to do business with us unless they have to here over the last, 12 months or so, probably more than that, but especially, I don't know how many times we've been sitting here, you and I have, and hey, China hasn't bought any beans yet. China hasn't bought any beans yet. They've finally shown some interest. So we've got to get this river level situation kind of straightened out. But, the only way you're probably going to do that immediately with the way the forecast looks is if you get something as far as a tropical storm. And boy, that activity is just pretty much nil. We haven't seen any activity there. So since Beryl, I don't know. We're going to have to see what happens. I think that you're going to continue to see these levels go lower. But we've got to hope that this weather pattern changes. With that the case, we don't really want to see a wet harvest. So
right.
Man, I don't know. I don't know what the right answer is.
It's becoming an annual event. This is like the third year in a row, and it's really not what we need. All right, let's jump to Brazilian weather.
Most key Brazilian soybean areas will remain dry for the next 10 days. This morning's Euro model indicates that only far southern soybean areas will be privy to rainfall through mid-month. Large portions of the country have been dealing with drought, which could result in delayed planting. This morning's extended GFS run calls for rains in southern Brazil and hints at rains returning to central soybean areas during the third week of September. In Brazil, September is typically a transition month, marking the end of the dry season and beginning of the wet season.
Are you or the people you talk to, Matt, concerned about this, or is it too early?
I think I already told you this before, maybe, but a couple weeks ago we were talking about, just some of the anecdotal stuff. People were talking about it here and there. We talked to Snodgrass, said, "Hey, Eric, could you come on our podcast or on our, our webinar on Monday?" And that would have been a week ago. And so he was on there, and he basically said, "I think you're going to stay dry through about mid-month," and he doesn't see the environment being harsh to the degree that they're going to stay as dry as what they've been. He, obviously noted that they were. He sees the environment set up to where they're going to turn around and get actually normal rainfall, and kind of cautioned us as to get too fired up about a major weather story developing down there, and so that's kind of the stance that we took. I have been in contact with him some, and clearly it's pretty tough, just like with the markets, it's tough to know what the weather's going to do tomorrow. Sometimes things can change. But at the same time, right now, I think that most of these guys feel good about them returning to more of a normal situation. La Nina is not strong in any way, shape, or form. It's kind of a weak one. And so sometimes in that neutral INSO type situation that you're in, I mean, you just don't get super harsh conditions.
As I think I mentioned this yesterday, what would be normal from a seasonal standpoint would be the rains return in late September, October. It would be very much abnormal if the rains did not return. So the odds on average over time, the odds favor rains returning here during the next 3 or 4 weeks.
U.S. farm income is slated to decline less than expected. According to the USDA, net farm income is estimated at $140 billion this year, down 4.4% from 2023. Despite a sharp decline in corn and soybean prices, if realized, the estimate will be 15% above the 20-year average of $121.5 billion. The estimate is much higher than the agency's February report, which projected net farm income to decline by 26% to $116.1 billion. Total crop receipts this year are anticipated to decline by $27.7 billion, a 10% decrease compared to last year. The decline is mostly attributed to lower corn and soybean receipts.
So you look at this chart, and it looks like a corn chart long term, right?
It does. I mean, bottom line, you guys and gals got a lot of money invested in this crop. I think clearly the reason why they're showing income better is you're looking at massive crops from the USDA standpoint. But you look at prices, and there's no question that the unfortunate thing for a lot of folks, is that you're below cost production in a lot of situations, and so it's a very challenging one. But I found this interesting. I looked at it as well, and I was trying to make heads or tails. I didn't have enough time to study it as thoroughly as what I wanted, but I'd like to get into the numbers a little bit just to see all of their methodology. But it's going to be a challenging year. There's no question. I mean, you come off a peak like that, and we all know that from a tax standpoint, there's some money spent in the times of feast, and then you get in times of famine, and you probably still have maybe a payment or two to make on some of these things that helped you in tax season a couple years previously. So it's a very challenging time, and there's no doubt this is going to be one of the more challenging ones we've seen.
I read through this report, and I'm not very smart, but I failed to understand parts of it. Net farm income is a broad measure of profits, and profits. What profits are we talking about here this year? The way that they define this, net cash farm income encompasses cash receipts from farming as well as cash farm-related income, including federal government payments, minus cash expenses. And then at the end of this, there was a couple things that didn't make sense to me. The debt-to-asset ratio for the sector is forecast to improve modestly from 12.9% in 2023 to 12.8%. There's no way that's factual. There's no chance in hell. They haven't seen the farm budgets or balance sheets that I've seen.
No, I mean, I don't celebrate that one bit,
No.
but we all know, every producer I talk to knows it. We have to, adjust the tie, so to speak. I mean, it's a bit of an attitude adjustment we're all going to have to go through. If they were going to be factual about this, Joe, then you'd have to downgrade the value of your equipment, plain and simple. Let's just be real.
I mean, a lot.
Last week at Farm Progress Show, they had an auction. First time they'd ever had one. And a few of the guys that were at one of the functions that I spoke at shared that the auctioneer said that even though their expectations weren't all that great, they knew that prices probably wouldn't, be overwhelmingly good. The number that I got was that they still only got about 55% of what they were expecting. And so there's no doubt, if you've got a tractor you paid $800,000 for last year, it's got 250, 300, 400 hours on it, Joe, it's probably worth 60% of what you gave for it. I mean, we know that. I mean, it's that's what auctions are showing. I don't like it. I don't celebrate it, but that's the fact of the matter. So if we're going to be 100% honest on our balance sheets, there is no way in God's creation the debt to asset ratio gets better this year.
They also said working capital is forecast to fall 4.2%. It's going to be much more than that.
Yes.
All right.
U.S. ethanol production declined last week. Weekly output of 1.06 million barrels per day was down 1% on the week, but up 5.4% versus the same week last year. Ethanol stocks were pegged at 23.4 million barrels. The print was down 1% compared to the previous week, but up 8.1% compared to the same week last year. Implied gasoline demand was down 4% compared to the previous week and down 1.4% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1% compared to the same period last year.
Ethanol production is strong. This is it's a bright spot with regard to the demand base. Where we need the demand is exports. That's what can move the needle. What are you hearing from end users, Matt? Are they sitting pretty right now for the most part?
I think for the most part, the interesting thing, Joe, is you hear about a random plant or two that didn't have the coverage maybe that they needed. I've actually heard from a couple guys in Iowa, that said that these guys will get a push on for a day or two, and then this massive amount of corn shows up, and they grind through it over the next 3 or 4 days, thinking, hey, someone's going to get started here one of these days, and then they have a push again. And so talked to a few guys, whereas like, for instance, ADM Decatur in my part of the world was running option price yesterday. I've heard guys in Iowa run 20, 25 over on like a hotbed. And so there's no doubt that not everyone has the coverage that they needed. And clearly some of the ethanol plants don't have a great deal of storage. So I don't know. I think for the most part, it's a nice thing for those that get a chance to, to be able to experience those hotbeds, and
they're going to disappear very quickly.
Oh, they're going to disappear super quickly. The nice thing is that ethanol plants are making money right now, and so margins are good, and I think that they will remain good, at least for the time being.
All right, a little bit of demand news here.
USDA reported multiple flash sales of soybeans on Thursday. U.S. exporters sold 5 million bushels of beans to China for delivery during the 24-25 marketing year, and U.S. exporters also sold 7 million bushels of beans to unknown destinations for delivery during the 24-25 marketing year.
Export sales, the weekly report is delayed this week because of the holiday, so it'll be out this morning. I think we're going to see another pretty decent week of new crop soybean sales reported. We're still going to be behind where we need to be, but at least we're moving in the right direction.
No, absolutely. I mean, we're definitely moving in the right direction. I still can say with confidence that without more weeks like we saw last week, 2.6, I believe, is what we came up with as far as million metric tons of soybean sales. We need several weeks, of what you would call very pleasantly surprising numbers for me to think we're going to sniff the USDA's number on new crop soybean exports. I think, I don't want to be a Debbie Downer, so to speak. It's hard to fathom, how they came up with that number. I understand it's a big crop, and that's a lot of times what you do whenever you have big production is that you raise demand. But we're going to have some stiff competition. I mean, there's no doubt, Brazilians are going to have a lot of beans to sell. And so we got to sell all of them we can. Let's hope the river works. But yeah, you're right. It's nice to see here lately.
As it stands now, we probably both agree that given what we know, USDA is overestimating new crop export demand. But, run into a Brazilian weather problem, those rains don't return, everything could be different. Things change quickly.
A decline in oil prices has caused gasoline prices to fall to 6-month lows. According to AAA, the national average price at the pump on Wednesday was $3.32 per gallon, 15 cents lower than a month ago and 49 cents lower than last year. The national average is expected to fall further as most Americans switch to less expensive winter-grade gasoline this month. Analysts believe the national average could fall as low as $3 per gallon by the end of the year. On Wednesday, the average retail gasoline price in 9 states was already under $3 per gallon. Oil prices continue to falter due to concerns over China's struggling economy and additional supply from OPEC Plus this fall.
I've had a lot of questions from subscribers about fuel prices. Here's U.S. average retail diesel price. It is down 87 cents per gallon versus the same date last year, 362 national average. And this is a national average that was $5.50 or more in mid-2022. Should farmers be locking up fuel, Matt?
I think that there could be, a little more weakness yet, Joe. I mean, Brian, our buddy Brian Split, he was looking at the crude oil chart here, last week, probably 10 days ago, and said there's a major head and shoulders pattern. And he was kind of projecting that we could work into the lower 60s. And so, I think now that you're in the 60s here over the last couple of days, you're in a better position obviously diesel's not 100% reflected by crude oil prices, but I mean, it's obviously very closely correlated. I happen to think that there's probably better days if I'm going to lock it all up. I know that we locked a third up earlier. We've just kind of been trying to be patient with this, and I'm not so sure that a guy getting spot price for tillage and whatnot this fall, he might not be in the best situation of anybody, from my personal opinion. But it is an election year. I do kind of expect that anything we can do to curb gas prices moving higher, we're probably going to do what we can do. But you got to expect that OPEC at some point might cut as well. So I don't know. From my standpoint, I'm not in any huge hurry. I think if you get below 65 on crude, I'm probably going to lock in most of the rest of my needs, but we're not there yet.
People are interested because there's probably some recency bias here. It was so high in 2022 and also pretty high in 2023 that it looks good. But you've got to venture to say that 2022 especially was an anomaly given the combination of inflation and then Russia, Ukraine, and everything that took place. Like we may just be reverting to more normal type prices here over the long term. What did cattle do yesterday?
Cattle futures had an ugly day yesterday. Live cattle were down 107 to 217 lower. Feeders were down 250 to 350 lower. Box beef was also lower. Choice ended the day at 311.51. That was down 9 cents. Select ended the day at 296.78. That was down 261.
Matthew, cattle market thoughts?
Yeah, I think there was some of this talk with this anthrax, and I'd like to hear what McKenzie has to say about that, because I don't think it's as big of an issue as what, I know that most people can avoid it, if they give them a shot, but people have gotten away from it. It has been my understanding over the years, but I don't know. The cattle market didn't necessarily need any bad news to throw at it. I mean, the investor just doesn't seem super excited to buy cattle right now. Fundamentally, it's still a decent story, but I don't know what do you think, Kenzie, about the story that came out yesterday?
I agree with everything you just said. Anthrax has always been around, and people have just gotten away from it. We vaccinate for it. The spores are always there. What happens is when you graze off that ground, there's more likelihood that your cattle could get it when you graze it off hard. I think it's just another story to kind of tug the market down, but that's just kind of my opinion.
Outside markets this morning, U.S. dollars about flat. Stocks are getting beat up. The stock market is begging the Fed for a half-point cut later this month. Bonds are up a little bit. Crude oil is about flat, 69.23 in October WTI. Matt, thanks for joining us. Guys, have a nice weekend. We'll be back on Monday.